The new weekly ETF fund from VistaShares, the Bitbonds, the 5-year enhanced weekly option income ETF. Is this one going to be good for retirement? Let's check it out. Now, before we go any deeper, I got to just give you guys a pre-warning that this video is really for educational. I am not a financial advisor, so past performances don't guarantee any future results, and this is for educational. If you need financial assistance, always contact a financial advisor or professional. So VistaShares BTYB, the VistaShares Bitbonds, the 5-year enhanced weekly option income ETF. Now, this fund is going to start off February 3rd of 2026. The expense ratio is really unique. They're going to tell you is a 0.49% plus a 0.03 acquisition fee charge for a 0.53%. So that 0.03 acquisition is when they're bringing in all the different treasuries and the Bitcoin and all that combining together. The net assets is going to start off right around about $2 million. So we're going to watch and see how that grows. The NAV is going to be at $24.93, so very fair price to start with, and we'll see how that one continues. And like we said, the weekly distribution. Now here's the kicker. Here's what they're trying to do, their goal that they're trying to achieve. They want to double the 5-year bond yield. So they want to get twice the annual distribution rate of a 5-year Treasury bond. They also are going to add and give you exposure to those treasuries plus Bitcoin. So this is really good for people who are afraid of Bitcoin, don't want to be into it, but don't want that volatility, but want security to give you some excitement. And I'll tell you why. The portfolio is diversified through a novel-based blend of U.S. Treasuries and some Bitcoin exposure. So with Bitcoin, maybe it could be a good time for this one to happen. With Bitcoin on its heels, it's kind of establishing its ground again. It could have that track history of moving forward, which would give it some nice potential growth. But you're not putting all your eggs in one basket. And that's always been the scary part with Bitcoin. If you're putting your eggs in that basket, you got to hope Bitcoin takes off. This one here is going to give you a nice blend between treasuries and Bitcoin. And it's going to seek that weekly income. The fund's going to seek weekly income primarily and capital appreciation as secondary. So that all sounds good. I'm just going to give you my 2 cents right off the bat is I like that you're going to put income first. But if you can hold your NAV, great. So total return here is going to be the major factor, whether they come out with. So the new fund will position itself in the low yield, high stable asset class. That's very important why we say that. This thing enters into the competitive landscape of safe assets, but it will distinguish itself through a unique underlying asset mix. While peers focus on traditional fixed incomes, BTYB is going to give that Bitcoin added to it to give it a targeted higher yield profile. So what they're targeting, what all the prospectus is put out there, you can see that they're targeting about a 7% yield. Now, of course, I don't chase yield. I don't focus in on yield, but we're going to use it in this case for a very important piece. When we take a look at NEOS's short-term income, they come in about 4.6, which is the CSHI. Then if you start taking a look at money market funds, and those yields now are about 3.6. And if we take a look at Roundhill's weekly bond fund, weeks, you're coming at about 4.0 yield. So we're almost, I'm going to just put it to, I know everyone's going to yell at me for using simple math, but it's almost double what we're looking at in the other funds. So it's definitely, the fund specifically is designed for a NAV consistency, aiming to avoid the heavy erosion that we've seen in ultra high yield products. So my keynote right now says, if you can hold your NAV, that consistency, and you can generate 7% return as an income, this could fit a lot of retirement portfolios in that stable classification to help many funds grow over time and hopefully take care of anything that's missing in a fund. So it's interesting right now already that why I wanted to look at this and say, if this is the potential, this could be a game changer for many, many retirement funds. The balance allocation, 80% US Treasury and only 20% into Bitcoin exposure. So again, they're playing the safety game, the 80-20 rule. 80% of the business will make up most of your income, while 20% will generate either the growth or increased potential of moderate growth. The strategy lies in the structure allocation, the conservative foundation while participating in the digital asset growth. That conservative 80% is in that U.S. Treasuries provide stability and reduces overall portfolio volatility. So we're liking that part of it. The growth component, they're looking at Bitcoin related exposure offerings, aggressive upside potential for modern growth. So, again, you're looking at 80% of the portfolio probably coming in for income and 20% for growth, which fits a lot of, I hate to say this again, but a lot of retirement portfolios are built around very similar structures. Now, the percentages may be off a little bit, but overall, many, many retirement portfolios that I look at and that I have developed and worked on are in that 60-40 or 70-30 of income versus growth. And this one's dialing it right in. Now, the risk profile. Ideal for risk-averse investors seeking Bitcoin exposure without the full crypto volatility. So again, this is one of those things, as I said earlier, that we are watching our volatility. So we're not getting full access into Bitcoin, but we're really having the treasuries covering our income. Now, the synthetic covered call strategy that targets those treasury yields, what they're really trying to do here is they're trying to generate a signature weekly payout that employs synthetic covered calls that are engineered to seek the 5-year U.S. Treasury bonds yield and generate that through those covered calls, which would give it about a 7% total return. So the strategic features of this is that weekly cash distribution, the synthetic option overlays, the Bitcoin volatility capture, and the Treasury-backed securities. Now their management model is trying to achieve 1.25 monthly yield target. That gives it its flexibility, upside exposure, active risk management, and the NAV-focused stability. And here's the big thing that I read in their perspective. Once the income targets are met, the funds are allowed to generate greater exposure to the underlying asset appreciation, ensuring investors benefit from both yield and market growth. So it's a unique feature that they're using. So the strategic entry opportunity amidst the Bitcoin volatility, well, here's the thing, the market content. Early 2025, Bitcoin was up to $100,000 per coin. So there has been a significant pullback and a correction, and the volatility of that market is highly implied volatility supports long-term yield. And the long-term 5-year trend remains very strong positive. So this is why it's probably a great time for yield to be into Bitcoin into this caliber. Okay, so I put it here on the chart to show you that in the past 5 days, Bitcoin's still down about 12%. In 1 month, it's down about 32%. Over 1 year, it's down about 22%. So why do we think it's going to recover? Well, the experts. It's not me. It's what the experts are saying. The experts are digging deeper into it. And I don't think VistaShares is jumping into something to say we think or we hope or we beg. I think they see something on the horizon here that could potentially give us some opportunity. I don't know, but just again, I'm reading the prospectus. I'm seeing what they're doing, and we see the history that this company has done. The strategic benefits are going to give you enhanced option premiums during volatility, lower entry point for that 20% Bitcoin exposure, and potential significant capital appreciation. So the market overlook, despite the recent scary price actions, the long-term fundamentals of Bitcoin remain intact. So BTYB's launch is strategically timed to capture the high yields from the volatility while positioning it for a potential market recovery in that digital asset pricing. And like I said, that's why I put this in here. I see these guys, I hate to say this, of VistaShares is looking forward. They're looking outward. I think they're looking out that the market could be enhanced, and they're going to capture some of it with security. The potential 7% yield can grow a $10,000 fund to over $14,000 in 5 years. Now, this is hypothetical illustration, but gives you an idea what the power that this fund can actually have using that 7% potential yield. So when you take a look at the initial investment strategy of putting $10,000, such as an emergency fund or a set it and forget it bucket, this allows the weekly dividend engine to build momentum without further contributions. The dividend reinvestment, DRIP, and we've talked about this before on this channel, that by reinvesting those weekly payouts, the portfolio benefits from exponential growth, generating over $1,000 in annual income by year 5. Now, the NAV consistency, which is the big potential here, the NAV of understanding that is unlikely high yield funds that erode principal. BTYB targets NAV stability. And then that growth potential. It includes that potential capital appreciation from Bitcoin or Treasury price increases, representing a conservative yield-only growth scenario. This is why we find this to be very handy into the retirement portfolios that we've looked at. Now, if you took that same $10,000, invested it, and left it into a fund for 10 years, you have that potential of doubling in 10 years and really quadrupling in 20 years. So it makes a big difference of when you begin and when you start into the process and don't. This is why this one with this just gives us that opportunity to continue to grow our security funds down the road. Now, BTYB is a balanced solution to the modern income investors. Having it on a weekly income, trying to have that potential reliable weekly distributions. And if they can do that NAV preservation, which is what they're saying they've engineered it for, and using that strategic mix of 80% US Treasuries and 20% Bitcoin, that gives it a balanced risk reward. And in modern portfolios, this could be used in emergency funds, retirement buckets, and strategic income. So the real verdict on this one, there's a lot of ifs, and there's too many ifs in the statement for myself, but if this thing works out, it's well positioned for investors to prioritize consistency and generate income with potential growth. So overall, everything seems to be on the up and up. That looks like it's potential that it could be a solid fund, especially in retirement accounts, as we talk about using them in the stable fund bucket or the emergency secured buckets. Well, it's simple that we're going to say, again, we're going to wait and see. But this would be my income and growth added to the stable bucket of my portfolio. So where is it? If you've not seen my videos about the 3-bucket system, we have a growth fund. This could fit in a growth fund, but I think it's more safer putting in our stable fund because it's 80% of stable assets. So this can make our stable bucket, again, rolling the dripping of this into it, could continue to grow our stable bucket so that we can take funds from that and put it into maybe an SPYI, a QQQI, something that's going to pay bigger income, bigger growth. But this is kind of like a continuously rolling through the process. So I still tell you it's a wait and see, but adding it to a stable income portfolio could be the real high key piece that many people are missing. So in retirement, that's where I'd be ending up looking at this down the road to putting into that point. Let me know your thoughts. Let me know what you're thinking of this. Hit that like button. Leave a comment down below. I'd like to hear what your opinion is. If you're a retiree, is this something that you may even evaluate and look into? Giving you the strong potential growth of Bitcoin, but an 80% fund in Treasuries that's paying out twice as much. Let me know your thoughts.
Thank you for watching. Press the like button, hit the subscribe button, and join. Leave any comments